If you're a beginner and want to start investing in the stock market, rest assured you're in the right place. In this video, I'll actually break down 10 easy steps to help you get started with investing with confidence. If you don't know who I am, my name is Tepper. I'm the founder and CEO of Tykr, which is a platform that helps people manage their own investments with confidence. And in this video, I'll break down a few things, including what is a stock, what tools you'll need, when to buy and when to sell, and how to reduce the risk of losing money in the market. So by the end of this video, you should have a lot of confidence getting started on your own. All right, let's dive in. Step one is understanding what a stock is. So a stock is a business, specifically a publicly traded business. There are a lot of businesses out there that are private businesses, but a stock is a public business. You and we can buy shares of that business. And this is also going to know that the data behind the stock, the financial data, that's all available for people like you and we can use that data to make smart decisions. We'll get into a tool here you can use in a moment, but that tool essentially analyzes all that data for you so you don't have to spend the time. And another key detail with a stock is a stock has a ticker symbol. Usually there are 2, 3, 4, sometimes 5 characters. An example would be Apple. Apple's ticker symbol is AAPL. Another stock would be Microsoft. Their ticker symbol is MSFT. Step 2, you need a broker. So what is a broker? A broker is a platform that connects your bank account so you can move money from your bank to your broker, and then within your broker, you can buy and sell shares of stocks. Now, there are brokers available all over the world. I'll give you a few names here. So I use TD Ameritrade, which is owned by Schwab. Some other big players out there are E-Trade, Fidelity, Robinhood. And then on a global basis, one of the more popular brokers, especially outside the States, that a lot of people use, so if you're listening to this, pay close attention to this name, this would be Interactive Brokers, which is available in about 200 countries and territories. Now, I'm not affiliated with any of these. I happen to use TD Ameritrade, but I'm not an affiliate. Essentially, a lot of these brokers I mentioned are safe. You can add your money to them and your money's going to be fine. But overall, this is a tool you'll need to buy and sell shares of stocks. And if you're interested, you can go down to our show notes and you can see a list of a lot of brokers our customers at Tykr recommended. Step 3 is when you're setting up your broker, you're going to have a few options. And I'll actually walk you through with a few examples here. You could set up a custodial account, a Roth IRA, individual account, and there's a bunch of other options, but you want to look for individual account. And this is really important, which is you want to make sure you create an account that doesn't have margin. You can, in some cases, ask for margin, which is essentially a loan. It's like you could get a loan, and then you can invest that loan, and then you'll make the profits on that loan. The problem is you're paying interest on that loan. That's one. And two, if the stock market goes down and you're holding stocks, especially with money that you bought with margin, what can happen is a margin call, which is that stock will sell at a loss and you will lose money. You don't want to do that. So margin, long story short, it can get you into a lot of trouble. So do not invest with margin, just set up a normal account. So I'll show you a few examples here. So looking at my screen, I'm on TD Ameritrade. I'm also over on E-Trade. And then I'm also over on Interactive Brokers. So what you want to look for is some kind of button that says Open New Account. You can see here that it drives to Open Schwab Account. Schwab just bought TD Ameritrade, so I'm going to go ahead and click Open Schwab Account. And this is where you'll see all those options like brokerage, retirement, automated and managed portfolios, estate planning, banking. You want to look for individual brokerage accounts. So you click this button here, and then you'll get into the setup process. I won't proceed here any further with TD, but let's go to E-Trade and you'll see a similar process. So you can see here, open an account, brokerage account, don't worry about retirement or savings and checking. Click continue, and there you go. You can see individual account is automatically selected. So I'll stop there with E-Trade, and let's go to Interactive Brokers. You can see here, open account, start application. All right, you can see this screen is actually asking you to create an account first, and then it'll probably ask you in the next screen, set up an individual account, or you have the other options. But again, you want to go for individual account and do not select margin. You don't want margin. You just want to invest your own money. You don't want to take out a loan to invest the broker's money. Number 4, you'll need a screener. So a screener is a platform that helps you determine what is a good stock, what is a bad stock, when to buy, when to sell, and really help you organize all your investments in one clean location. Now, I'm biased. Tykr is a screener and educational platform all in one, so I'll show you what that looks like real quick. Here's the homepage. You can see the logo. We're all about investing with confidence. And then I'll also always give rave reviews about our competitors. So Simply Wall Street is another good option. You could go to Simply Wall Street. They're a good platform as well. And then Seeking Alpha is quite popular as well. Might be a little more geared towards advanced investors, but they do have a lot of information on the platform. So those are what I would consider the top 3. Of course, I'm biased because I use Tykr. So just to kind of give you a metaphor here, your broker, think of it as your car, your vehicle, and your screener is the gas, or if you drive electric, it's electric. So you need the two together. If you really want to make progress with your broker, you need that screener along the journey. So the two work together. Okay, step 5, when to buy. All right, so this is a 2-step process, and I'll show you in Tykr here in a second. So step 1, and this is specific to Tykr, not to simply Wall Street or Seeking Alpha or any other screener out there, but with Tykr, we use a 2-step process. Step 1, on sale stocks. To give context there, stocks in Tykr are either on sale, watch, or overpriced. On sale is green and overpriced is red. So you want to avoid those overpriced stocks. So step 1, look for those on sale stocks. And step 2 would be look for a 4M score of as close to 80 or higher. The next question you may have is, what is the 4M? The 4Ms are essentially this. A lot of people with investing, especially in Wall Street, will only look at the math part of investing. And fortunately, Tykr does that math for you, but a lot of people look at the math and they'll stop there. We have to take a step back and realize that investing is more than just math, it's also business. And this is something Warren Buffett has taught us, is you want to make sure you invest in businesses you know. In my case, I have been working in tech close to 20 years, so I know a lot about tech, but when it comes to pharmaceuticals, I don't know enough to invest, so I tend to avoid pharmaceutical stocks. But anyway, coming back to the 4Ms. So you have the margin of safety, that's the math part. Then you have the meaning, which is how does a company make money? Number 3 would be the moat, that's how a company stacks up against the competition. And number 4 would be the management. That's the track record of the CEO. So if you can put all 4Ms together and get a score that's as close to 80 or higher, that's really good. That's a buying opportunity. So let's look at those 2 steps within Tykr. So I'll go here. This is a stock some of you may be familiar with, some of you may not, but this is Fortinet. It's a cybersecurity stock. You can see this stock is on sale, and the 4M score is 80 out of 100. This is actually powered by OpenAI. It kind of walks you through the process. It's kind of gamified. It can take like a minute or 2 to get through. I'm going to show you something here. I'll actually go to my watch list to give you guys an example what this looks like when you look at a bunch of stocks. So you can see like Adobe's watch, Apple's watch, AMD, PayPal's watch. Fortinet is on sale. We go down the list, you can see Palantir's on sale. So this is how the tool looks. So that way you know, like, hey, what's a good stock and what's not a good stock? Kind of giving you that green light, red light rating system. Because a lot of people out there, they're gonna say a stock is good or bad. You really don't know. So we cut through the clutter with Tykr to help you understand. But anyway, that's when you buy a stock. This leads to step number 6, which is when you sell a stock. As opposed to a 2-step process when buying, this is a 3-step process. So you want to sell a stock when it flips from on sale to watch or overpriced, typically overpriced. So that's step 1. Step 2 would be when the stock's 4M score gets close to 59 or lower. If it's at, like you just saw Fortinet, if it's at 80 and then drops to 60, that's a problem. That right there, that would be a sell, except for step 3 of this process. Again, it's 3 steps. I'll kind of run through them again. But the 3rd step is really important, which is rule 1 investing, which means rule 1, don't lose money. Rule 2, don't forget rule 1. That means you do not sell stocks for a loss. A lot of people get in the habit of buying stocks, letting them go down, their emotions take over, and they sell for a loss. Then they buy stocks, the stock will go down, they'll sell for a loss, and rinse and repeat until they have no money left. That's a big mistake. What you want to do is remind yourself that these are businesses, and the stock market goes up and down like waves in the ocean, and in many cases, it's going to lift those stocks right back up, so you're fine. So just to rehash there, the 3 steps for selling stock would be the stock flips from on sale to watch or overpriced, 2, that 4M score is close to 59 or lower, and step 3, rule 1, investing. And to show you an example, let's dive into Tykr. So here's GameStop. GameStop was super popular within the stock market a few years back. This stock is overpriced, and that 4M score, look at this, definitely less than 59. This is at 46. So if I were holding GameStop and it flipped to overpriced and this dropped to 46, I'd be like, I'm out, I'm selling this stock. And then looking at this, you can see here, is this a stock I would buy? Most definitely not. Of course, if you want to see more stocks like Fortinet or GameStop, you can certainly join Tykr for free. But let's keep going. Now let's move on to step 7, which is how to buy a stock. Okay, so I'm jumping into Think or Swim, which is owned by TD Ameritrade, which is now owned by Schwab. But anyway, this is a nice platform to buy and sell shares. Most brokers out there, it's very similar. So I'll kind of show you the basic fundamentals. All right, so I'm in this platform. You can see this is a simulated trading account and it's got fake money in it. And you might run into your broker and see you can set up a normal account, a real account, or a simulated account, or sometimes called a paper trading account. The simulated or paper trading account allows you to play with just fake money just to get used to the platform. And I tell people, go ahead, sign up for a paper trading account if it's available and use it for about a week. Don't use it for months because then you're just wasting time, but use it for about a week or less just to get comfortable, and then you can start buying some real stocks. So I'll show you in this platform how to buy a stock. I'm currently on Apple. Let's just go to another stock here. I'll go to, let's actually go to Fortinet. That's that other stock I showed you in Tykr. All right, it'll pull up the chart. And then what I'll do is I'll just kind of hover over the price and I'll right click, and you want to look for buy and sell. So we'll see buy. And you're going to see this pop up. And TD Ameritrade, what it does is by default, it says 100, so 100 shares. In this case, I don't want to do that. I just want to buy 10 shares. I'm just going to change that to 10. And then you want to go to the right. And this is really important. You have different order types. You have market, limit, stop. The only option you want is market. What market is, it's going to buy the price you see or close to. It might be a few cents off, but don't split hairs on that. You want to look for market. The other options can create situations where it won't buy right away. It'll wait to the end of the day. It'll wait for a certain price. And in many cases, it might not even buy at all. So you want to just look for market order. So I'm going to select market. So essentially what this is going to do is buy 10 shares at market at this price. So I see the price is about $66.50. Again, don't split hairs on the cents. And let's go ahead, confirm and send. And you're going to get a pop-up. Most brokers should have a double confirmation. It shouldn't, like if you click buy, it shouldn't just buy stocks. It should really confirm with you that, hey, do you want to buy this many shares? So you can see here, okay, so I'm going to buy 10 shares of Fortinet. I'll go ahead and click send. And there you go. I just bought 10 shares. All right, now let's move on to step 8, which is how to sell. So we're just going to kind of reverse that process. I'm on Fortinet. I'll go over here to the price. I'll go to right click, then click sell, and you'll get that same pop-up. In this case, you can see it's red instead of green. And let's say instead of selling 10, I want to let's go sell 5. We'll sell 5 shares. Again, we'll go to the right to make sure you select market order. There we go. Let's go to confirm and send. And there we go. I just sold 5 shares. So again, your broker might be a little different, but the fundamentals are pretty basic. Is you got to buy and sell and double confirmation, and make sure you look for that market order. Don't go with a limit or stop loss or anything like that. Okay, the next 2 points are more focused on helping you get in the right mindset and helping you reduce risk of losing money. So this moves us on to step 9, which is ask why. If you're talking to a friend or your next door neighbor, or you're at a holiday party and somebody gives a recommendation on some stock, the last thing you should do is buy that stock. The first thing you should do is ask why, and then step back and be silent. Just listen to their response. And in most cases, they're not going to have a logical response on why a stock is a good or bad investment. Now, fortunately, if you're using Tykr, you will know if a stock is a good or bad investment. So you can cut through the clutter to really understand, is it a strong business or a weak business? So that's step 9, ask why. Never take somebody's word for it. Again, you may hear somebody say something. I'm listening to podcasts, I'm listening to YouTube, just to hear what people say. And I hear these recommendations and I'm always like, yeah, we'll see about that. So I go to Tykr, punch in the Tykr symbol or the company name to find out, is that truly a strong business, or is it something I should run away from? And this leads to step number 10, which I kind of hinted at before, but I really want to hit this home. which is rule one investing. This is one of the most important things you will ever hear. This is actually from Warren Buffett. Again, rule one investing goes as follows. Rule one, don't lose money. Rule two, don't forget rule one. And what this really means is training yourself to have the discipline to not sell stocks for a loss. In my case, I do not. I made the decision years ago, I'm not going to lose money in the stock market. So when I buy a stock, I'm committed for the long term. I'm not just buying for the next week or two or the next month or two. I'm buying for the next year plus because I want compound interest working for me. Now, when you buy a stock, this will happen in a lot of cases, so don't freak out. It's going to feel like the moment you buy, it goes down, and then your anxiety goes through the roof. This happens all the time. Again, I mentioned this earlier. The market is kind of like the waves of the ocean. Don't worry about the market. You're focused on the business. So there will be times when your stock will go down. It could hang down for a week, 2 weeks, a month, 2 months, 3 months, whatever. That's okay. Because there's also something else that happens. And the Motley Fool Money, if you guys ever listen to that podcast, says this all the time. A rising tide lifts all ships. What that means is the market will go through these rallies and it's going to lift everything up. And I had to do this with different stocks in the past. So I'll actually give you 2 examples, but I will wait. If the market goes down, I will wait for the market to lift it back up until I'm profitable. And then I will sell for profit and then move my money over to another stock. So real quick here, I'll show you those examples. I'll go ahead to Tykr. Let's go to Rollins. So Rollins, if you guys don't already know, this is a company that owns other companies like Orkin. So anything like pest control, think about termites or ants or hornets. They do a lot of that. They've got a lot of brands under the business, and it's definitely a necessity. I know it's not the most glamorous business, but it was years ago. I bought it. Stock went down and I decided, let's follow rule one and I'm not going to lose money. So I waited, I think I waited like maybe 6 months or so. And then the market really took off and I sold at that point for a profit. Another example would be Callaway. So going to the screen here, you can see Top Golf Callaway. There was a merger a few years back, but this is the same situation as Rollins. I bought the stock. Financials were looking really good. It went down and I decided at that moment, okay, I'm not going to lose money on this. I'm going to wait and I'm going to let the market lift it back up and I will sell for a profit. And what this does is, and this is really important, it trains good behavior in the stock market. You want to be buying and holding for the long term, and you don't want to get in the habit of training a bad behavior of selling for losses. Because like I kind of alluded to this earlier, is people can buy, stock goes down, they sell for a loss, move into something else, they buy, goes down, sell for a loss, rinse and repeat. That's a bad habit. You want to do the opposite. Buy, hold it for the long term, and only sell for a profit. So there you go. There are 10 easy steps on how you can invest in the stock market with confidence. If you like this video, hit that like button. If you want to see more like it, hit that subscribe button. And if you want to start investing on your own with confidence, I invite you to join Tykr for free.